Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague here, Yatin, Mota. Yatin, we are back after a truncated week, and if you look at the markets, we did pick up momentum in the second half of the session, which drove a near triple-digit rally on the index. So. 19,900 reclaimed, albeit briefly, but we'll have to see whether or not we manage to sustain those levels. In fact, reclaim that level tomorrow as well, because most analysts or market experts believe that once 19,900 holds, we have the potential to hit that 20,000 mark once again. Midcap index managed to hit a fresh high today. You had the metals and energy pack doing well. Realty index as well managed to hit a fresh high in today's session. What didn't do well was the FMCG pack as well as the pharma pack that kind of gave up its gains towards the end of the session and ended the day in the red. I also want to mention that we've seen a jump in volatility, even though we saw a good pickup when it comes to the market momentum. But if you look at the India VIX index, that was up somewhere around 7% or thereabouts towards the end of the session. Among the individual movers today, Adani group of stocks on a tear. So Adani twins feature among the top Nifty gainers. Tata Motors ahead of the Tata Tech subscription, in fact, allotment figures, that stock was up and about. In fact, managed to hit a fresh high today, I think, coming very close to that 700 rupee mark. BPCL, Coal India, ONGC were the other movers. On the flip side, you had Aisha Motors, Apollo Hospitals, ITC, ICICI Bank and Cipla. Those were among the losers. But Yatin, mid-cap end of the markets, quite a few movers. You had exchange stocks like BSC, MCX, all of them up and about. What are you picking up? What are your top, spots when it comes to the mid-cap index?
So, mid-caps, obviously, Nandita, the Adani Group stocks were active. Apart from the large caps, the smaller Adani Group companies, be it NDTV, be it Adani Transmission, Adani Gas, Adani Power, all of them were up. We also had oil marketing companies and refining PSUs up. So, Chennai Petro was up 6-7%, IOC, HPCL, BPCL, we know they were the top gainers. But yes, Adani Group stocks, oil marketing companies and exchange stocks were doing well. In fact, BSC, MCX both are trading at a multi-year high. BSC obviously for the reason that Jefferies has initiated coverage, and MCX has been rallying. In fact, the stock has almost doubled, Nandita, in a short span of maybe 1.5 to 2 months. So strong going for the exchange stocks as well. When it comes to other mid-cap gainers, we have the Adani Group stocks as well as stocks like Prism Johnson. That stock was up 8%, NBCC up 5.5%, Suven Pharma up 6%. So yes, the list is long. However, on the flip side, the stocks like Raymond as well as Mamaearth, which is Honasa Consumer, declined by 6% each. Suzlon saw some profit taking. That stock was down 4%. So is the case with Amber Enterprise and eClerx. Both of these stocks were down 4% in trade.
All right, quite a lot of action in the mid-cap end of the markets as usual. But of course, as I mentioned, towards the second half of the session, we saw the index also, the broader markets as well pick up, and the benchmark indices also managed to clock in strong gains. But on that note, let's take a look at the top stocks that are on our radar this afternoon. Starting with the entire OMC pack, of course, Yatin also mentioned that the stocks have gained quite a bit. If you look at HPCL, BPCL, IOC, all are up anywhere between 4 to 6% apiece. Of course, there's a very bullish report coming in from HSBC, which has really fired up some of these stocks. It has upgraded all the three counters to a buy from hold. Stocks, of course, have hit a fresh 52-week high as well. In fact, HSBC has pointed out that the performance of these OMCs have improved in the first half of the current fiscal, which has boosted their cash flow as well, and improved balance sheets, and of course the fact that crude prices have cooled off quite a bit, from $95 to $100 per barrel almost. We have come down to $80 per barrel when it comes to Brent crude prices, and that could support short-term profitability if you look at some of these OMCs, right? So for BPCL, HSBC has raised the target price from 340 rupees to 555 rupees. For HPCL, target price from 215 to 375 rupees per share, and for HSBC, IOC, I beg your pardon, target has been raised from 80 rupees to 130 rupees a piece. Of course, the first half performance has driven up the book value, and aside of marketing margins, of course, that were boosted by a fall in crude prices, refining has also picked up, and it is expected to improve further. And the uptick in the refining business has been driven by a favorable product slate, higher diesel over gasoline, recent upgrades at the refineries, as well as access to cheaper Russian crude. These are some of the factors that have aided the refining end of the business for some of these OMCs. And you know what, HSBC has also pointed out that there is potential, for free pricing post the general elections. Of course, the government has not given a free run to these OMCs to price fuel, right? But of course, that's happening because we are entering into general elections, and then there's pressure to contain inflation as well. But HSBC says that once the polls are out of the way, the OMCs may get some pricing freedom, which in turn could add and impact their profitability in a positive way. And they've also said that investor confidence is expected to return when it comes to these OMCs in the calendar year 2024. In terms of earnings, HSBC has revised the FY24 to FY25 earnings estimate for IOC by anywhere between 58 to 120%, for HPCL by 40 to 166%, and for BPCL by 76 to almost 200%. So yes, looks like right now things are going good for OMCs, and the confidence is expected to return. However, there are some risks. Any upside, sharp upside in crude prices, of course, that will come in as a dampener, and any non-remunerative investments that these OMCs choose to make, that is something that could be termed as a risk or as a downside risk for these OMCs. But for now, today we saw some of these shares hitting fresh 52-week highs.
Absolutely, and typically near the elections, oil marketing companies tend to fall, before the elections, and probably after elections we see a typical rally coming in, and probably that is what's playing out post this state government election which have just concluded. Obviously, the results are still awaited this week. Moving, from oil marketing companies to hospitals, and today Goldman Sachs came out with a report on Fortis Healthcare. They have a buy call on Fortis Healthcare with a target of 400 rupees. Now, Fortis and its units, Fortis Malhar, have sold, their South Indian hospital for a consideration of 128 crores. This marks the exit from the Chennai market for Fortis Healthcare. More importantly, Fortis has said in the release that Fortis Malhar, the proceeds which are received from the hospital, will be used to distribute to its shareholders and probably create some value. Obviously, the divestment is a significant, process or an event which probably streamlines the company's, expansion plans, because not only they free up capital, but they will be able to focus on their core business. Now, remember, Fortis plans to add nearly 400 beds over the next few years to expand their hospital bed capacity, and probably divesting non-core assets makes sense according to Goldman Sachs. Now, the company plans bed addition largely in Delhi, NCR and Punjab regions, and the exit from non-core markets like Chennai would probably mark a beginning of expansion plans to accelerate in the North Indian markets for Fortis.
All right, that was about Fortis, of course, but let's shift focus to some of these exchange stocks. As you were mentioning, MCX, of course, has hit a fresh high, and BSE also, moving towards its 52-week highs. We did see some bit of profit booking in shares of BSE over the last few sessions. Of course, after the kind of run-up it has seen, on a 3-month basis, on a 6-month basis, some bit of profit taking has been happening. But of course, yesterday we had a very positive report coming in on Jefferies. In fact, it has initiated coverage on this particular stock with buy rating and sees a 24% upside from current levels. Remember, as I mentioned, the stock has already given multifold returns if you look at a 6-month basis or a one-year basis. But of course, if you look at the Jefferies report, they have mentioned that Indian exchanges are benefiting from financialization of savings as well as rising equity participation, and they are also benefiting from the growth in equities as well as product innovations. Of course, we know that BSE has relaunched its derivative contracts. In fact, it is giving a tough competition to NSE as well, and on the back of that, Jefferies believes that the company can deliver 150% earnings jump in FY24, because this is the year we saw a relaunch of the derivative products, right? And thereafter, it could double it over FY24 to FY26. So that's a pretty positive report coming in there. Remember, derivatives products that have been launched, they have already captured market share of 14% or thereabouts, vis-a-vis less than 1% 6 months ago. So that's a massive jump in market share, right? So, and going forward, it will only strengthen its position when it comes to the derivatives market. So these are some of the positives that have been highlighted by Jefferies, but of course regulations and stiff competition could still pose potential risks for the company going forward. But for BSE, we have to see whether or not it can really jack up the market share going forward or not. And derivative income, Jeffries believes the share of derivatives income can rise to 35% of its total revenues in FY25 vis-a-vis just 2% in FY24, the second quarter of FY24. So room for upside is there according to Jeffries, but let's see how much of an upside, because 24%, Yatin, the kind of up move the stock has seen, 24% looks like an understatement.
Absolutely, and Jeffries is on a roll. Earlier they had an initiating coverage on Honasa, that stock did well, and now today BSE posed an initiating coverage report, has seen some solid traction. I think their team is probably one of those teams wherein a lot of responses received from institutional investors, and most of the initiating coverage reports are taken seriously by the street. And BSE, which corrected from levels of 2400, 2500, is again trying to regain that lost momentum.
That's true. Well, those were the stocks on our radar this afternoon. But of course, if you have any comments, leave them in the comment section below. And of course, we'll be back with the markets at 8:30 a.m. tomorrow. So don't forget to tune in. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.